Well, today marked the end of a tough week on Wall Street as concerns over coronavirus grow. The Dow Jones somewhat rebounded after being down 1,000 points earlier today. It ended the day down 357. Now, this was the worst week the Dow has seen since the 2008 financial crisis. And with this week's steep drop, many people are concerned about their 401ks. Our Kevin Freeman spoke to a financial expert about how to navigate the downturn and joins us now with their advice. I know a lot of people are all ears.
You are right, Tracy. Now, the main piece of advice he gives, don't panic, even after you look at your 401k balance. Now, financial experts say 401ks and investments in the stock market are typically for long-term financial security. So they say right now the best thing to do is just write it out.
You have to go all the way back to the financial crisis in 2008 to be down 12.5% in a single week.
The stock market took a major hit this week, and so did many 401ks. No one is sure how the coronavirus, now sweeping the globe, will affect the economy, and that has many investors jittery.
If you get online this weekend and look at your account balance and it freaked you out a little bit, you might want to wait till we get a little bit of a recovery and then reassess your level of risk and see if you want to diversify it into some other things.
But Jim Lineweaver of Lineweaver Wealth Advisors in Valley View says now is not the time to panic or overreact.
There's been 13 corrections prior to this one. We're kind of close to the average on a bottom, and though you got to remember the recovery might be longer than just a week. So I'd probably say we're in the 3.5 to 4 month range, but that's not too bad considering what we're going through with this virus.
The virus halted production and manufacturing in parts of China, but Lineweaver says that has appeared to stabilize. He says American biotech companies could actually see a boost as they race to come up with a coronavirus vaccine.
The people that have this or that could have it, but also whoever's first to the table that can get approved. Could you imagine what could do with that to their stock price?
Lineweaver also says there is a positive way to look at the impact to your 401k.
So whenever this recovers and nobody has a crystal ball, you'll get actually an accelerated return or a benefit from that because you're buying shares at such a lower price.
He also says money in the equity market should always be for long-term investment.
It's going to come back sooner or later, and if you really have to rely on something, rely on these other maybe savings, CDs, fixed income investments that you have, and you shouldn't have a problem at all.
Now, the stock market actually did not close as bad as it looked like it might at one point, as you mentioned earlier, Tracy. In the last 20 minutes of the day, it increased more than 600 points, especially after the Federal Reserve indicated that it would consider cutting interest rates to ease economic fear.
All right, the takeaway from all of this, everybody just take a deep breath and be patient.
Be patient.
Thanks, Kevin.
Yeah.